93% of traders never see a single dollar from prop firms. And yet, the industry just hit $20 billion in 2026. That's not a typo. The gap between what prop firms promise and what traders actually receive has never been wider. But here's what shocked me after spending weeks analyzing the three biggest names in the space. One firm pays you during the evaluation phase. Another lets you keep 100% of your first $25,000 in profit. And the third? It might drain your account with monthly fees before you ever make a trade. The difference between choosing correctly and choosing poorly? It's not a few $100. We're talking 5 figures over a career. Real money. Life-changing money. And I'm going to expose exactly which firm deserves your capital, and which one you should avoid entirely. Let's get into the data that nobody wants you to see. The proprietary trading industry exploded from virtually nothing in 2020 to a $20 billion behemoth by 2026. More than 2,000 prop firms now compete for your evaluation fee. But here's the number that should terrify you. Only 5 to 10% of traders pass their challenges. And of those who get funded, a mere 7% ever receive a single payout. That means for every 100 traders who pay for a challenge, maybe 1 or 2 will actually make money. The rest are funding the industry's growth with failed attempts. This brutal reality makes your choice of firm more critical than your trading strategy. Pick wrong, and the house wins before you place your first trade. So which firm gives you the best shot at joining that elite 7%? Let's break down FTMO, FundedNext, and Apex Trader funding across every metric that matters. FTMO pioneered this industry back in 2015. They're based in Prague, have over 36,000 Trustpilot reviews, and a 4.8-star rating. That kind of reputation takes a decade to build, but reputation alone doesn't pay your bills. Here's how FTMO works. You pay a one-time fee ranging from 155 euros for a $10,000 account, up to 1,080 euros for a $200,000 account. Then you complete a 2-step evaluation. Phase 1 requires hitting a 10% profit target. Phase 2 drops that target to 5%. Both phases require you to stay under a 5% daily loss limit and 10% maximum drawdown. And here's what separates FTMO from the desperate newcomers. There's no time limit. Trade at your own pace. Pass both phases, and FTMO refunds your challenge fee with your first payout. You'll start with an 80% profit split, which can climb to 90% through their scaling plan. That plan also grows your account by 25% every 4 months if you maintain profitability, all the way up to a $2 million cap. The catch? FTMO runs on demo accounts with simulated funds. You're never trading real capital. But your payouts? Those are very real. Traders report receiving funds within 1 to 2 business days of requesting withdrawal. Now let's talk about the challenger trying to dethrone the king. FundedNext launched in 2022 from the UAE, and they've already built massive momentum with over 42,000 Trustpilot reviews and a 4.6-star rating. But their real weapon isn't marketing, it's their profit structure. FundedNext offers something no other major firm matches: a 15% profit share during the challenge phase itself. Read that again. You can earn money before you're even funded. After 10% growth on your funded account, you'll unlock that bonus with your regular payout. Nobody else does this. Their stellar model comes in multiple flavors: a 2-step challenge with an 8% then 5% profit target, a 1-step challenge requiring 10%, and an instant funding option for traders who want to skip evaluation entirely. Maximum daily loss sits at 5%, with an overall drawdown limit of 6 to 10% depending on your account type. But here's where FundedNext really separates itself: 95% profit splits on CFDs, up to $4 million in scaling potential, and their 24-hour payout guarantee. Miss that window, and they pay you an extra $1,000 as compensation. That's confidence you can measure. Account costs range from just $32 for their smallest Stellar Lite option, up to several hundred for larger accounts, significantly cheaper than FTMO for equivalent capital access. Now let's examine the futures specialist. Apex Trader Funding. If you trade ES, NQ, crude oil, or any CME futures contracts, Apex built their entire model around you. They launched in 2021 and have already paid out over $598 million to traders. Their evaluation is refreshingly simple. One step: hit your profit target, which ranges from $1,500 on a $25,000 account to $18,000 on a $300,000 account. Maintain your trailing drawdown. Complete 7 trading days. Done. But the profit split structure is where Apex gets aggressive. You keep 100% of your first $25,000 in profit. 100%. After that threshold, splits drop to 90%, still industry-leading. Some promotional periods even offer 100% splits indefinitely. The hidden cost? Monthly fees. Apex charges ongoing subscription costs, ranging from $137 to roughly $180 per month depending on your platform and account size. Those fees continue whether you're actively trading or not. Over a year, that's $1,600 to over $2,000 just to maintain your account, before you've made a single profitable trade. They do offer lifetime activation options. $130 to $360 as a one-time payment. But you need to pass the evaluation first. And their trailing drawdown system is notoriously aggressive, trailing your peak intraday balance including unrealized gains. One big winning trade that pulls back? Your drawdown floor just moved against you permanently. So how do these three stack up head-to-head on the metrics that actually determine your success? Let's talk profit splits first. Apex wins on raw numbers. 100% of your first 25K is unbeatable. FundedNext follows with 95% for CFDs and that unique 15% challenge phase bonus. FTMO caps at 90% after meeting scaling requirements. But profit split means nothing if you can't get to payout. Evaluation difficulty matters enormously. FTMO's two-step process with no time limit is demanding but fair. I 10% then 5% targets with unlimited time means patient traders can succeed. FundedNext offers flexibility through multiple evaluation paths, from aggressive one-step to relaxed two-step options. Apex's single-step evaluation looks simple on paper, but that trailing drawdown has ended more trading careers than market volatility ever could. Industry data shows Apex has higher first-attempt pass rates, 15 to 20% compared to the standard 5 to 10%. But that's partly because their evaluation is shorter, not easier. The funded account rules at Apex include consistency requirements, risk-reward ratio limits, and drawdown policies that many traders underestimate until it's too late. Now let's examine what you're actually paying for this opportunity. FTMO charges €155 to €1,080 as a one-time refundable fee. Pay once. Pass, and you get it back. FundedNext starts even lower. $32 to several $100s depending on challenge type. Also refundable upon success. Apex looks cheap upfront. Evaluations often run 70 to 90% off during frequent sales, meaning you might pay just $16 to $30 initially. But add monthly platform fees of $137+, and the math changes dramatically. Fail 3 times over 3 months? You've spent over $400 in fees alone, before accounting for challenge costs. For serious traders who might need multiple attempts, FTMO and FundedNext's one-time fee structure provides better downside protection. For confident traders who can pass quickly and trade consistently, Apex's profit split advantage could outweigh ongoing costs. Here's what nobody mentions about prop firm selection. Your trading style determines which firm fits best. Swing traders who hold positions overnight or over weekends. FundedNext allows overnight and weekend holding across most programs. FTMO has restrictions on their standard accounts but offers a swing-specific account type. Apex automatically closes positions at the 5 p.m. session break. You can opt to reopen at 6 p.m., but you're forced out of positions daily unless you actively manage around that window. News traders face similar considerations. FundedNext allows news trading with some profit attribution rules. FTMO restricts news trading on standard accounts. Apex permits it but warns against aggressive directional news scalping. Algorithmic traders and EA users? All three firms allow expert advisors and automated systems, though each has specific requirements around responsible use and avoiding system exploitation. Scalpers looking for tight spreads and rapid execution? Apex shines here with futures market access and no spread concerns. FundedNext and FTMO operate through CFD platforms where spread costs impact profitability. Let me tell you about the risks nobody puts in their marketing materials. First, prop firms can and do change their rules. Apex introduced their 3.0 update in late 2025 that modified payout windows and consistency requirements. Traders who built strategies around OLD rules faced unexpected challenges. Always verify current terms before committing. Second, account terminations happen. Violate any rule, even accidentally, and your funded account disappears instantly. No warning, no second chance. That trailing drawdown at Apex? Cross it by a single dollar and you're done. Third, the industry itself has instability. Finance magnates estimated 80 to 100 prop firms shut down or exited in 2024 alone. So stick with established names who've proven they can weather regulatory scrutiny and market changes. So after everything I've analyzed, who should choose which firm? FTMO fits best if you want maximum structure and industry reputation. You'll pay more upfront, but the unlimited evaluation time, predictable fee structure, and decade-long track record provide security that newer firms simply cannot match. For forex and CFD traders who value consistency over maximum profit potential, FTMO remains the gold standard. FundedNext wins for traders seeking aggressive growth potential and flexible evaluation paths. That 95% profit split, 15% challenge bonus, and $4 million scaling cap create a genuinely compelling package. If you're confident in your strategy and want every possible dollar of your profits, FundedNext offers the best mathematical opportunity. Apex Trader Funding dominates the futures space. If you trade ES, NQ, crude, or any CME contract, Apex provides access and capital no forex-focused firm can match. That 100% profit split on your first $25,000 is unmatched anywhere. But go in with eyes wide open about monthly fees and aggressive drawdown mechanics. This firm rewards disciplined, consistent traders and punishes those who rely on occasional big wins. Here's my bottom line. The prop firm industry survives because 93% of traders fail. They collect evaluation fees, monthly subscriptions, and reset costs from hopeful traders who never see a payout. Your job isn't just choosing the right firm. It's becoming part of the 7% who actually get paid. That requires risk management, emotional discipline, and a strategy that works within strict parameters. The firm you choose matters enormously, but the trader you become matters more. If your experience with any of these firms differs from what I've covered, or if you found success where others failed, I genuinely want to hear about it. Your likes and subscriptions help me know which topics to explore deeper next, because the difference between a 5-figure payout and a blown account, it often comes down to information the industry hopes you never discover. One more thing before you go. The average trader spends $4,270 on prop firm challenges before ever turning a profit. Think about that number. $4,000 burned through failed attempts, reset fees, and monthly subscriptions. But the traders who succeed, they approach this differently. They treat the evaluation like a job interview, not a lottery ticket. They test their strategy in demo conditions that exactly match the firm's rules before paying a single dollar. They pick account sizes that match their actual skill level, not their ego. A $50,000 account with manageable drawdown beats a $200,000 account you'll violate in week 1. Every single time. The data proves something most traders don't want to hear. Passing a prop firm challenge isn't about finding the perfect entry. It's not about catching that one big move. It's about repeatable, controlled, boring consistency that survives for months or years of volatile markets. The traders in that 7% who actually receive payouts? They risk under 2% per trade. They follow rules without exception. They treat losses as information, not personal failures. They understand that the challenge isn't testing their prediction ability, it's testing their discipline under pressure. That's what separates professional traders from expensive hobbyists. And no amount of choosing the right prop firm will compensate for choosing the wrong mindset.